Hello, entrepreneurs. Joe DeChara coming to you live from downtown Bethpage, Long Island, New York, for another amazing episode of How to Win at Business. And if you're watching live, please give me a hashtag live. If you're watching the replay, give me a hashtag replay. If you have any questions, please post them in the chat box. If if I don't answer, it's because I can't do two things at once. I sometimes it works, sometimes it doesn't, but I can guarantee you that if you have a question, I will answer it. Because the great thing with Facebook is when somebody comments, you get a notification. I love Facebook. And I really enjoy giving valuable information to entrepreneurs. I've heard the term that we don't know what we don't know. And my question is, how would we know that? How would we know what we don't know unless you start looking for it? And I could go through a whole list of important questions that people never ask me, and questions that they ask me that really don't matter. But the thing is, I understand it, because when you go into a business, there's a lot of unknowns. There's actually too many unknowns, which is why we do. And when I say we, I mean my company. I'm the CEO and founder of BedrockBusinessBuilders.com. The corporate name is Bedrock Business Builders Corp. And really it started with the search for why. I thought it was about why other people don't become successful, but it actually turned into, why can't I become successful? Why can't I become as successful as I want to be? And what I found out is the things that I didn't know that I didn't know. But the thing is that I knew that I didn't know, and my shortcomings was in two areas. Number one, marketing, and the other one was uh, building a team. Building a team, because you can't do this yourself. And mastermind groups, coaches, self improvement, these were all things that they didn't teach me in CPA school that make all the difference. Okay, they can teach entrepreneurship, they could teach business. I took business in college. Most of it was malarkey, because most of it had to deal with things that most people never even see. Gigantic market analysis and all kinds of stuff that I really can't use. And again, I understand the universities, they want to prepare you for a job, a job so that you can come out and work for corporate America. And if you're going to go work for, let's say, Coca-Cola or IBM or Apple, and you want to be in sales, well, you got to know something about marketing. Well, the truth is that most people that start a business don't need all that information. They don't need all that information. And when I applied to college, it wasn't so I can get a big fancy job. I always had the intention of starting and running my own business, or businesses, because I was born to be an entrepreneur. It's in my blood. My mom was an entrepreneur. Uh, Her mom was, without really knowing it, but they created stuff and they sold it, and they found ways to make money out of nothing. Okay, that's what an entrepreneur is. We defy logic. What entrepreneurs do is we take an idea that most people think is crazy, and we make it happen. Now, most of the time, it doesn't work, but that's another thing that makes us entrepreneurs: the tenacity, the willingness to keep going and tweaking things. You know, I used to think the Rocky Balboa speech to his son. Life is tough, and you got to keep getting up. No matter how hard life hits, you got to keep getting up. So I thought, as long as I just keep getting up from all the failures and the trials and tribulations, that I would be fine. But my coach, Larry Broughton, said, no, the the way you become successful is you get knocked down and you pivot and you get back up. He said, if somebody knocks you down with a punch and you just get up, they're just going to punch you again. And because if you're doing the same thing, you'll get the same results. Again, these were things that they didn't teach me in college. Maybe they did, but I missed out on that. The truth is that a lot of the stuff that I learned today is stuff that my mom taught me when I was growing up, and I just didn't listen. Which is another thing that we do as entrepreneurs when we first start out. I believe there's no way around the pain, because it's painful to start and run a business. There's no doubt about it. But there is a solution to the suffering. And suffering comes from anxiety and not knowing what you don't know. So, one of the questions that I never get asked is, how much can I deduct in business startup cost? And the first thing that you have to figure out is, what are business startup costs? Well, people have an idea for a business, and if they don't take action, all it is an idea. It's a fantasy. It's just an idea, and it either germinates and grows, and then some action is taken. But unless there's some action taken, there is no business. It's all just a fantasy in somebody's mind. But the truth is that anything that's ever been created started with an idea. So now you take a step. You have no formal business structure, but you decide to get in your car and drive to Staples and order some business cards. Well, guess what? Your car just became partly business use. You can deduct the trip. You can deduct what it costs you for the business cards, but where are you going to deduct it? You don't even have a business yet. If you stay as a sole proprietor, you deduct it. Now, what the IRS wants you to do is not take it as a deduction for what it is. In other words, they don't want you to say, oh, I had gas expense, I had car expense, I had printing. What they want you to do is lump it all together into business startup costs. Now, for record keeping, you got to keep all the backup, but on your tax return, it's not going to go on one of the expense lines. It's going to go on another line where they consider it an asset. So, I get these emails from the IRS, and whenever I get one of them that I think is important, I like to share it with my people. So this morning I got this email about, here's how businesses can deduct startup costs from their federal taxes. Okay, so this is publication 535. Well, first I'll show you publication 583, and I point people to this all the time because you should really get familiar with what the IRS wants you to do. So, and part of it is to see how crazy they are with their ideas on how you got to, operate your business. But that being said, the IRS enforces the rules. That's what they do. They're an administrative branch of the government. Their sole mission is to collect the right amount of taxes that people owe. Uh, but when they do publications like this, you got to take it with a grain of salt because it's not written in stone. The fact is that every situation is based on facts and circumstances. And the IRS would love you to have, a clean set of books and records that clearly represents your business activities. But let's be pragmatic here. Let's be real. When people start a business, they're not organized usually. And even if they are organized, they really have no idea what they're supposed to keep, how they're going to keep it. They have an idea to generate revenue. Okay. And now, unless they have somebody like me, a professional, giving them the real story, the real juice on how things happen, they're going to start spinning their wheels. And the reason is because a new business owner needs to make money. So, what we do at Bedrock is we try to cut to the chase, provide, valuable information so people don't have to spin their wheels. And more importantly, what I've found is that most people are worried and about things that have no significance in their business, like uh, what can I deduct? And I answer that in my YouTube channel. So you can search me on YouTube and subscribe, and I talk about all of these issues. So now what's going to happen when somebody starts a business? If they follow me, I'm going to have them incorporate. They're going to have to pay me. They're going to have to pay the state fees. They don't have a business bank account yet. So how are we going to account for this stuff? Well, first of all, you have to realize that you have to account for it. Now, let me show you. I'm just going to share this for a second, because if you go to publication 583, they have on page 9 what business startup costs are. Okay, now there's some things that you can't deduct. Okay, uh, and there's most things you can deduct. But let's see what you can't deduct. So the first thing is, now the important thing is that you could deduct up to $15,000. Now they say 10 and up to 5. So it's 15, but you got to organize it between business startup costs and organization cost. So an organization cost would be something like, paying me to organize the business, the state licensing fee. Most people don't spend $5,000 on business organization cost, or even $10,000 on startup cost. But let's say you did. Let's say you spent 25,000. So what you do is you get an immediate write-off of the 10. You get an immediate write-off of whatever the organization costs are, and then the balance is what the IRS considers a capital asset. So you're going to put it on your books, not as an expense, but as an asset, like it's a fixed asset, like it's a car, a piece of equipment. Okay, and you're going to take, you might consider it depreciation, but because it's really an intangible, you're going to take what they call amortization. Bottom line is it's still a deduction. It still winds up on the same form on your tax return. It's just on a different line. And whatever the balance is, so let's say you spent the 25 and you got to deduct the 15 right off the bat, the remainder, the $10,000, what's going to happen is you got to amortize that over 180 months. So let's say let's add $8,000 to that cost. So it goes, you spent 33,000, you got 18,000 left. So every month you're going to get 1/180th. I guess that's $100 a month. So that's about $1,200 a year as amortization cost. Now, so this gives you some information, but now publication 535, it actually gives you the same information. But the bottom line is, what you want to do, and let me get rid of the screen here. What you want to do is you want to maximize your deductions. Everybody wants to. And the truth is that I think a lot of people just, because we don't know what we don't know, we miss this stuff. And that's why I'm doing what I'm doing. So here's some info. I'm going to share the screen again because the email was actually better than the publications, believe it or not. So let me see. Oh, there, stop share, and now I'm going to share this screen. And so in this email, and unfortunately only tax professionals can get these emails, uh, they have what they call qualifying cost. So what they say is, here's some of the examples: analysis of potential markets, advertising, any salaries and wages, which is really a double-edged sword, because how can you have wages? You don't even have a business set up. You don't have a federal tax ID number. Uh, but let's say you have wages. It's more common maybe to have outside contractors. Maybe you hired a coach, somebody to tell you what to do. Travel. Let's say you want to open a business in the Caribbean. You're a travel agent, so you have to go to the Caribbean uh, to learn about starting your business. Non-qualifying costs. So there's only really one: research and experimental cost. Interest and taxes. So if you borrow money to do this, you can't deduct the interest expense. That's not that big a deal. Most people don't have interest expense unless you're financing this. And let's not make it more complicated than it is, because it's really, listen, when you go into business, all you need to know is you have to keep track of stuff. There's no way around that, folks. I'm sorry to burst your bubble, but if you want to discuss it with me, all you got to do is go to timewithjoe.com, and I'd be glad to discuss any issues that you have with your business. Or you can go to Mastermind with Joe and register for our free mastermind group, where we meet every Friday at 11:30 a.m. Eastern Standard Time. We play games, we have fun, we network, we support each other, and we learn. So that's my story. I'm sticking with it. God bless. And keep track of those business startup costs. And folks, if you missed any, you might be able to file an amended return and recapture and get some money back that you forgot about. Maybe you left some money on the table.